Today we are at Polytechnique, the most prestigious engineering school in France, the French MIT, in the global tech hub of Paris-Saclay. And today we are going to talk about Bitcoin, why Bitcoin is the best store of value, why Bitcoin Treasury companies are the most performing companies in the world, and how the blockchain group is positioning to capture this opportunity as the first Bitcoin Treasury company listed in France. I'm Alexandre Laizet, Director of Bitcoin Strategy and Deputy CEO of the blockchain group. It's the first Bitcoin Treasury company listed in France on Euronext Growth Paris. What this means is we raise capital to accumulate Bitcoin on the long term. You had two main examples in the world before. You had MicroStrategy in the US and Metaplanet in Japan, and both have been the most performing companies in the world compared with their benchmark in financial terms. So we adopted this strategy on 5 November 2024, and we already tripled the market cap, and we are up 175%. So the question is, why is this interesting for investors, maybe other than short-term speculation, and how does it work concretely, and why Bitcoin as a store of value, why Bitcoin Treasury companies, and how does this work overall, and for you as a key takeaway, how Bitcoin could influence your future as well, and how could you use it for your benefit, maybe other than short-term speculation, as you mentioned. So Bitcoin is on a need-to-know basis, meaning that if you don't need it, it's very not likely that you will understand it or you will have a will to really take time to study it. So the blockchain group has experienced a significant financial setback 2 years ago, and this is what basically has also been part of the journey towards Bitcoin. The blockchain group had a subsidiary called AnyBlock that now has been liquidated. It was specialized in Web3 wallets, and so it didn't survive the last bear market in crypto assets, and it was liquidated. The company was completely restructured, a new governance, and two operational companies now specialized in data intelligence and AI and specific web developments for Web 2 and also blockchain applications for our clients. And those two companies now have returned to profitability first semester of 2024, and that has led to strong foundations for the implementation of a new strategy designed at targeting a new opportunity for growth for the company, not only on the operational side, but also on the treasury side. This is something that is new, a concept that is new for entrepreneurs, is that you can generate value not only on the operations, but also on the management of the treasury, because the asset that you choose to capitalize on will also define your future, not only the operations that you do. And as much you capitalize the company, as much also you will be able to develop your operations in the future. So that's why we adopted a Bitcoin standard on 5 November 2024. That's also when I joined the company, because before I was digital assets lead at Accenture, the biggest consulting firm in the world, and I used to work with 30 plus financial institutions on their digital assets strategy, from digital asset custody, payments, tokenization of financial assets. And before that, I was also economist at EY, where I worked with half of the biggest corporate treasuries in France, in the CAC 40. So over these experiences with a lot of multinational corporations as a consultant, I've been exposed to the best and the worst of corporate finance. And back in 2020, when I discovered Bitcoin, I was seeing corporate treasurers allocate billions and billions of euros and dollars to money market funds that were generating negative interest rates, not even real interest rates, but even effective, the nominal rates were directly negative, plus the inflation to take into account, plus the cost of capital, and that was destroying billions and billions of dollars of value on the balance sheet of companies. And there is a team, there is a mainstream view in corporate finance that when you have cash, you want to dispose of it. You don't want to keep it as a treasurer. You want to give it back as dividends. You want to give it back as buybacks of your own stock. And this is destroying shareholder value because, in fact, instead of this, you could just recapitalize your company on the strongest asset on earth, which is Bitcoin. I will go back to this after that. And capitalize your company and over time, keep your money. I mean, this is the use case of Bitcoin. I will go back to that just after, but the use case of Bitcoin is to keep your money in an inflationary monetary expansion environment and in uncertainty over the world. And in this environment, you can just keep your money, and in a context of early adoption, you can also generate a higher performance than the others because you were more early than the others. So the blockchain group, since the adoption of the Bitcoin Treasury Company strategy, we are up 175%, and we doubled, tripled, and now quadrupled the market cap as of today. It was 30 million mid-December, now it's 40 million. And now we are in a position to completely redefine the future of the company, both from a treasury standpoint and from an operational perspective. Because as a company, if you are a 40 million market cap, you don't have the same options as when you are a 1 billion market cap. And I mentioned MetaPlanet in Japan. They were a 15 million market cap back early 2024. Now they are 1 billion market cap. So you see that it is possible, and the options are multiplying when you capitalize your company on Bitcoin. So maybe why Bitcoin first? So Bitcoin, to make it simpler, is the only globally accessible asset that has absolute scarcity. Okay, so you know gold that has a great scarcity on the world, but still gold is inflating at on average 2% a year, meaning that when there is more demand for gold, people can mine more gold, and the supply, global supply of gold increases. So this is about 2% a year. This is like inflation, in fact. So Bitcoin is only 21 million of it. It's a fixed supply, and that's the core value proposition. There is no other secure and decentralized asset and globally accessible asset that is with a fixed supply. So the absolute scarcity is what makes the value and is what you can see from an exterior perspective as high volatility, high speculation, and financial craziness, because you measure the Bitcoin in terms of fiat, euro, dollar, and you see that it's speculative because you look at the price of Bitcoin in a fiat denominated way. Yet Bitcoin doesn't really care because one Bitcoin is just one Bitcoin, and the denomination in dollars or in euro is just a human phenomenon of pricing and free market capitalism, because you have offer and demand, and the newcomers that come. I know a lot of you said I started to trade Bitcoin and cryptocurrencies. Well, people that are long-term investors in Bitcoin, they don't trade. They just buy and accumulate for the long term. So actually, the price formation that you see of Bitcoin that is highly volatile is being formed by the newcomers that don't still understand Bitcoin and want to trade it to make a short-term profit. And this is why you see these very high, sometimes fluctuations that make you think, okay, this is highly speculative. But in fact, the price of Bitcoin doesn't matter. What matters is its absolute scarcity, and it's the same like when you buy real estate. You don't measure the price of your apartment every 10 seconds, and you don't go out in the street to ask people to buy it or to sell it and what would be the price. This would be extremely volatile. You would get a different offer every day, and sometimes it would be lower than that when you bought it, and so on. So people that understand Bitcoin, they buy it for the long term, and then they hold it for a period of 4+ years at least. Ideally, they never sell it because, as you can see, this chart on the left side is from BlackRock. As you know, they launched their ETFs that were the most successful ETFs in the world in Bitcoin, that had the most impressive growth of the history of all ETFs. And what you can see here is, yes, there are extreme fluctuations. You can go down -80%, -70%, but it's still after 100x, 20x, 500x. So you can see that from this chart, you could assume that there are diminishing returns as well over time. As people understand it, maybe there is less potential for growth after high adoption, but still, this is on a log chart. So at the end of the day, it's exponential adoption. If you are putting that in front of the adoption of the internet, this is following the same curves. So we are like in the 2000s for the adoption of the internet, and we are at 5% of global population that have touched from directly or indirectly Bitcoin. This is about 300 million people. So it's already 300 million people. People don't understand, but France is lower than that. So it's already like a big country holding a lot of Bitcoin, and it's changing the world because it's a new protocol. What people don't understand, they think it's a bubble, it's like tulips, it will fail, or it will go on as one of these financial speculations that is a short-term bubble. When you have 1, 2, 3, 4 drops of 70% that go every time low, but still higher than the last top, you can start to think, okay, maybe people understand that this is not a bubble and they hold it for the long term. And it's like saying English is a bubble. No, English, and why am I speaking in English in France? It's because it has been the best protocol for communication worldwide, and people have adopted the best protocol for speaking between themselves, and there is no second best protocol. I mean, this is what people are using every day. So it can change, of course. There can be wars, and then you lose the war, and the one that won the war puts his language for everyone. But it turns out that in digital asset world, Bitcoin is the most powerful network. Bitcoin is the most decentralized, it's the more secure, it's the only significant one bound by energy. I saw a few people who are interested in energy. Bitcoin is fascinating for people that like energy. The Bitcoin network is powered and secured by the equivalent of 21 nuclear reactors. Okay, so this is the equivalent in terms of energy power that you can project, and it's distributed over the world. So you have 40% in the US, a bit more with Canada. You have also 30% if you take into account China, Kazakhstan, Russia, and then you have the rest of the world. And so no entity, no centralized government, no centralized entity can take control of it. And what it solves as a problem is the double spending issue. As a distributed network, the problem that it solves is that you can make sure and audit at any time that the rules that are respected, that there are only 21 million Bitcoin, and that the absolute scarcity is respected. And this makes it the best store of value, not only the best digital store of value between other crypto assets, but the best store of value. I would like to make another point about the difference between Bitcoin and other crypto assets. I asked you specifically what is your view on Bitcoin, and 99% of you told me I know a bit, or I don't know about blockchain and cryptocurrencies. My question was about Bitcoin. So Bitcoin is a crypto asset. In fact, it's the largest crypto asset. It's 60% of the crypto asset market in terms of value. It's about $2 trillion. So if you focus only on Bitcoin, you already target 60% of the market value. And when you take the crypto assets that are bound by energy, meaning powered by the Bitcoin mining or over mining for other crypto assets, Bitcoin is 90% of this, 92% or more. So there is really no competition with Bitcoin. And why Bitcoin is different from the other crypto assets in terms of value and why it's the only one that has absolute scarcity, it's because it's linked with something material. We think it's something digital in the sky, but it's linked to real energy. The 21 nuclear reactors I mentioned, it's not nuclear reactors per se, but it's like data centers over the world that are securing the network. And people say, oh, but this consumes too much energy. This is a bad use of energy. My answer is, what do you think you would spend of energy to make sure that you keep your money? Today, the energy that is spent to keep the value of the dollar is secured by the US Army. It's endless wars and over the world. This is real power. This is violent power. As a country today, and with the election of Donald Trump, try to say that you want to go off the US dollar, you don't want to use it anymore. Well, good luck. You will be on a list that will not help you economically, I think. So the US dollar is today the reserve currency, and it is backed by military power. It is real power. Bitcoin actually is an innovation because you are backing the reserve of value by non-lethal power. You are literally backing the value of an asset, of the best asset for store of value, by energy, by electricity. This is not violent power projection. And on top of that, the use case is enormous. In the world, there are about 1 quadrillion of assets. It's 900 trillion of assets. And today, Bitcoin is 2 trillion. So it's still extremely small. And that's why you see a lot of volatility, because you have growing demand and absolute scarce supply. So it's 2 trillion, and only the market cap of money in the world is 100 trillion. So Bitcoin could even demonetize other asset classes. People are already thinking about selling other assets like securities, stocks, bonds, even real estate. People are selling these assets sometimes to buy Bitcoin. But even if we take this off and we only take the market of money is $100 trillion. Today, Bitcoin is 2 trillion. Okay, so you can make your own calculations on the price potential in fiat terms that you want, because this 100 trillion with inflation is going to be 200 trillion maybe in about 10 to 20 years. So if you take only 10% of this, 10 trillion, this is the market cap of gold before. Now it's 18 trillion. So if you only take the market cap of gold, 18 trillion, 20 trillion, Bitcoin is going to $1 million in euros. Okay? So this is extremely conservative because Bitcoin is better than gold. Bitcoin is scarcer than gold because today's inflation of Bitcoin is 0.75%, something like this. Because it goes, today we have 20 million Bitcoin in circulation. We will have 21 million Bitcoin in circulation by 2140, something like this. And so every 4 years, the supply of Bitcoin is halved. This is called the halving. And this is what you can see, I hope, on the screen. This is what you can see here. Every 4 years, you have these massive bull runs that coincide with the halving, when you halve the annual inflation rate of Bitcoin. And you have at the same time liquidity cycles in the world for traditional finance that make it that every 4 years you have cycle of more liquidity coming and then liquidity going down. And at the same time, those two things happen. So this is happening again. you had the last halving that happened last year, and at the same time you see a lot of financial activity in the world today with levels of debt never seen, discussions about the interest rates and so on. And so you have, again, today, you have the same cycle repeating of the supply shock of Bitcoin itself and the monetary expansion that is the only solution to debt. So, a long way to describe Bitcoin. Sorry about this. But if you had to remind only one chart today, I mean, you could even walk off the room and don't listen to me anymore. The only chart that you have to keep in mind is this one. Okay? This is why companies, now governments with the US, are considering Bitcoin strategic reserves. Because it's not only me now saying, okay, Bitcoin is a good reserve of value. You have the largest institutions in the world that have launched financial products for Bitcoin. You have the US government that now is saying that they want to establish a US strategic stockpile, including Bitcoin. And you have every week new companies that are adding Bitcoin to their balance sheet. Well, why are they doing this? Is because Bitcoin is performing at 60% annualized performance over 4 years. Annualized. It's not the performance in 4 years, it's annualized. So what you see on the chart is prices going down, up, extreme volatility. You think that you can do minus 70% if you buy at a certain point and so on. But the fact of the matter is no one has ever lost money in Bitcoin over 4 years. And in fact, they made 60% annualized, which is higher than the Magnificent 7, 30%, than the S&P, 15%, gold, 6%. I mean, you can look at every index in the world, any ETF. Bitcoin is completely outperforming even hedge funds. The best hedge funds last year, they did like 40% performance, 30%. They can even do 50%. Bitcoin did 100+%. So the difference between all of these indices and all finance that is selling you a lot of different financial products, and you will then diversify over all of these products. Well, the difference is with Bitcoin, you only buy Bitcoin, you get 60% historic returns, and this is the low number. Over the years, it's been, before it's been 200% annualized, 150% annualized, 100% annualized, and now it's between 40 and 80% annualized. So even if it comes down to 30% annualized, well, in terms of risk-adjusted returns, because you can just focus on Bitcoin and do your work. People today, they have to be excellent at their job. You mentioned you work in AI and so on. Well, if you don't understand Bitcoin, you will work your full job in AI during the day, and then in the night you will put your hat of professional trader to try to keep your money, because the effective cost of capital is 10%. Everybody is putting their money in the S&P at 15% annualized return. So if you keep your money and you do less than 15%, you are losing money. Okay? So maybe you are outperforming your initial social peers, but you are not going up. Okay? So as a young person, starting in life, starting in work, you can either choose to link your performance to dead assets that look like stable coins, literally, or you can power your life with Bitcoin and have your money appreciate over time instead of being completely diluted over time and go in debt in the hope that an asset will appreciate, instead of just keeping your money with Bitcoin and the absolute scarcity does its thing. Then, of course, it has risk. Okay, so I mentioned a lot of the benefits of Bitcoin. You can lose everything. Okay, if there is a problem that we don't know of, it can go down. This is a possibility. The thing is, if Bitcoin remains decentralized and secure, it is not going down. Because at the end of the day, what backs Bitcoin is the 300 million people that I mentioned. These 300 million people that own Bitcoin, that touch Bitcoin in some way, they do it for one thing, because there are 21 million Bitcoin, it's bounded by energy, and nobody can touch it unilaterally. So you can also, in real life, that's an example that Michael Saylor gave a few days ago, the owner of MicroStrategy, the largest holder of Bitcoin in the world, as a corporate publicly listed company. He said, look, if there is a 300 million people army in front of you, coming at you, you can ignore it, you can say, okay, I will ignore it, you can, but when it comes at you, it will obliterate you. Well, if there is a 300 million people army holding Bitcoin pacifically, with no violent power projection, and they generate 60% annualized return, and the demand is increasing over time, you can see that, you can measure, you can see this, it's following the internet adoption curve. Well, comparatively to them, you are completely losing the value of your work. So in fiat terms, fiat meaning fiat currencies, euro, dollar, etc. In fiat terms, you make money, 15% with the S&P, but in Bitcoin terms, on a Bitcoin standard, you are effectively losing purchasing power. So even Larry Fink, the CEO of BlackRock, now said on TV that he is a believer on Bitcoin, that Bitcoin probably is going to $700,000. But at the end of the day, again, the price in fiat terms doesn't really matter if you invest in the long term, because it's absolute scarcity and it does its work by itself. So, in this context, when you have the best store value on Earth, you have a phenomenon that is emerging, is publicly listed companies recapitalizing on top of Bitcoin. So what they do, and that's why they are called Bitcoin Treasury Companies. Before they were called Bitcoin Development Company. It's MicroStrategy that developed this concept. It's that you buy Bitcoin with your excess cash flows, you raise capital in equity or convertible debt to acquire Bitcoin in an intelligent leverage way, and you start to measure the value of your company in Bitcoin terms. So now what matters is not the fiat value of the company in some way, it's in a Bitcoin standard, how much the company is able to increase its Bitcoin per share. What this means is when you do a capital raising operation, are you able to increase more the number of Bitcoin on your balance sheet that you create dilution, because you will create shares. And so the objective of the Bitcoin Treasury Company is to, when they do a capital raising operation, is to increase by a higher percentage the number of Bitcoin on the balance sheet than there is dilution. And in this way, as a shareholder, before the operation, it's an example, but before the operation you have 1 Bitcoin per share, and after the operation, maybe you have 1.2 Bitcoin per share. And over time, maybe it's volatile, but first, volatility is vitality, because if you are not volatile, nobody looks at your stock on the market. You want your stock to be volatile. And so adopting Bitcoin as a treasury reserve asset makes your stock interesting for investors, and by the way, investors that buy it, investors that sell it, investors that long it, that short it. This is interesting for any investor. And that's why Michael Saylor says, look, I will never sell the Bitcoin, I will respect your trade. If you are shorting me, please continue to short me, because as much you short the stock of my company, as much I can raise convertible debt and buy more Bitcoin with it, because the more short positions on a company, the more you can raise institutional capital because they want liquidity in the short and the options market. So the Bitcoin Treasury Company takes volatility at its advantage to raise more capital, increase the volatility, acquire more Bitcoin, raise more capital, and so on. And of course, as an investor, and I get the question often is, why would I invest in a Bitcoin Treasury Company versus Bitcoin directly? Well, first thing first, when you invest in Bitcoin directly, it's in some ways the best way to get exposure to Bitcoin because you own it, you can own it directly, assuming you own your private keys. Because if it's not your own private keys, we say that it's not your Bitcoin, not your keys, not your coins. However, in terms of financial returns, the only thing that is better than Bitcoin is more Bitcoin. So as a Bitcoin Treasury Company, what you're able to do is you're able to raise the capital and you're able to increase this Bitcoin per share. So as a shareholder, potentially in terms of value, you will get more value over time, not in a specific short term, but over time, if you believe in Bitcoin. If you don't, of course, but in the first place, if you don't invest in Bitcoin. But if you invest in a Bitcoin Treasury Company, you get the increase of Bitcoin per share over time. You get the multiple of valuation. That's what you can see here. Bitcoin Treasury Companies are completely outperforming Bitcoin. MicroStrategy over 5 years is 30x. Bitcoin is about 15x. So effectively, MicroStrategy is a 2x Bitcoin. It's a levered Bitcoin. And why is it possible for publicly listed companies to do this? Is because you can raise convertible debt in conditions that are accretive for investors. Why? Because its long-term debt is 4+ years, so you don't get the risk of the cycles with less than 4 years. It's at a premium to the reference price of the share, and on top of that, you increase the number of Bitcoin on the balance sheet and you defer the conversion in shares. So for investors, it's very advantageous. And what you get is the outperformance of Bitcoin potential. That could be the reverse also in sometimes in bear markets. If the price of Bitcoin falls sharply, in sometimes you can have the market cap that can go even lower than the net asset value of Bitcoin. That happened at some point for MicroStrategy, but it's a very short period of time. So of course, it's an interesting way to invest if you are a long-term focused investor or an experienced trader that wants to take advantage of the volatility. So that's why at the Blockchain Group, we decided that adopting a Bitcoin Treasury Company strategy was the most accretive strategy for our shareholders and with the most potential to maximize long-term shareholder value. So the playbook is extremely simple. In fact, what is difficult is to stick to it for many people. I get a lot of demands from a lot of companies that ask us to do things with our Bitcoin. No. The objective is to raise capital, to buy Bitcoin, to never sell it, to hold it forever, and to not touch it. The objective is to not lose it, not sell it. This is the most valuable asset on Earth. You don't want to play games with it. So this is the strategy. That's it. That's it. And as a reminder, this is a treasury strategy. This means that when you have a company that is capitalizing on top of Bitcoin, MicroStrategy, for example, now they are close to 100 billion market cap. If Bitcoin does the 10x I mentioned, from 100K to 1 million, they will become a 1 trillion company. Okay? So when you are a $1 trillion company, and plus the multiple, it could be even higher, 3 trillion or so on, they will be able to do a lot of things as an operational company. So people say, okay, why are you keeping the Bitcoin? What do you do? Because traditionally, if you raise capital and you don't do anything with it, this is toxic. You are losing value. If you keep the euros, you have a negative effective interest rate that you are losing billions of dollars of value every day. When you raise Bitcoin and you keep it, and you keep it for a long period of time, and the adoption takes on slowly but surely, en fait, you are one of the best capitalized company in the world in about 4 to 8 years, and you are able to do whatever you want at this time. And as you know, the world will completely change with AI. And so at this point, MicroStrategy could, at this point, do any form of M&A that would even allow us to grow the Bitcoin per share as well and grow the operations potentially. So in fact, the Bitcoin Treasury Company strategy is part of the normal thing that would do a rational operational company that would be in AI, for example. We are specialized in AI tech consulting. And so the best thing for us is to recapitalize on Bitcoin and with this be a more valuable company than our peers that are doing the same thing without Bitcoin. We have discussions sometimes with companies that approach us and they say, look, this is our cash flow, would it interest you? And I say, but this is your cash flow in fiat terms. If you do 5 million of cash flows today, and you say, my company has 5 million of cash flows, and to value the company, let's apply a multiple of 10x of the cash flows. Okay, but the 5 million cash flows in 10 years in Bitcoin terms, it's worth about nothing. It's worth 500K in terms of purchasing power of Bitcoin that you can get with these cash flows. So if you don't convert your cash flows into Bitcoin, well, what are you doing? You are wasting shareholder value and you are wasting the value of your work. Unless there is only one exception, I would say, to putting cash flow on Bitcoin, is investing in yourself. If, of course, and it's the same for people in everyday life, between buying Bitcoin and doing studying at Polytechnique and launching a business and going into a venture, except if it's a Bitcoin Treasury Company, to do both at the same time. But if you invest in yourself, this would be always more valuable than buying Bitcoin if it's an investment. If it's just spending for luxury items and so on, it's not the same thing. But for investing in yourself, it's completely different. So for an operational company, it's the same. You want to recapitalize your company, but you don't want to forget your company. And that's why we also continue to develop strongly our operational activities at the blockchain group. So how this works in practice from an institutional perspective is, as I mentioned, when you add Bitcoin to your balance sheet, you add volatility to your stock, to your stock market. Our volumes on the stock market, you can look at it before we adopted the strategy and now, are up by 3x, 4x already. So this increases a lot the volumes, the interest of the people, because if as a company you grow by 10% a year, you are not interesting for investors. Because if you grow by 10% a year, you are not more interesting than the S&P 500. If you grow by 10% a year, but you acquire Bitcoin that grows 60% a year, you multiply your potential of growth. So then you add the volatility on your stock, and shout out to Dylan Leclerc, Director of Bitcoin Strategy at MetaPlanet. He posted this synthesis that I find very interesting. So then the volatility of your stock goes up, which means that over time when you have a high market capitalization, if you have high volatility, investors are interested in the options market that you can develop around it. The options market is that people can bet that the price would be at some price at some point, and other investors can sell the opportunity to have the right to buy the option of a stock at a certain price and without taking the risk in the meantime and paying an interest and so on. So it's all of a hedging market for investors. Typically, the investors buy the stock and then they hedge on the options market, because then they have a leverage hedge, and if the stock goes down, they have the benefit on the hedge position that they have. So then the options market goes up when your volatility goes up, and when your options market goes up, you can raise more convertible debt, because institutions, they want a lot of volatility, liquidity, and options market to allocate large portions of convertible debt. And this is how MicroStrategy convertible debt that were issued on the market were the most performing convertible debt in the world in 2024. 70%, 90% returns for investors, because they got the Bitcoin exposure, and at the same time they were hedged with the options market. And for them it was, of course, an incredible investment. And already MicroStrategy was the largest issuer of convertible debt last year. So you could think that Bitcoin is a small phenomenon, that is a short-term bubble, but in fact is completely taking over financial markets, and Bitcoin is infiltrating all financial instruments in the world. So it is starting with convertible debt, because when convertible debt is applied to a Bitcoin company, it can generate more returns with the hedging that is still possible. And so for MicroStrategy, then you have when you add Bitcoin again with the proceeds of the convertible debt, you buy Bitcoin, you increase again the volatility, and so on. And then you can again raise capital. And so, of course, this has risks. If you do it without consideration of the risk of leverage and so on, this can be risky, but I will show later on how this can be made in an accretive way that is risk minimized. And last but not least, and that's why also I do this course today, and that's why we are making a recording, because we want to be as much transparent as possible on the model of Bitcoin Treasury Company for investors, and to give as much information as is available for the investor to make their own decisions. The only thing I would say before going on how it went well for us and so on is we often oppose Bitcoin and fiat currencies. I said you get negative interest rate with fiat currencies and so on, but in fact, and that's why I put the positive communication, is because even for fiat currencies, and that's why the US are considering a Bitcoin strategic reserve, is because as much Bitcoin you have as a country, with the companies in the country, with the individuals, and even as a state, as much your country and your currency will be valuable. It's like as much gold you have as a country, as much your currency is valuable. Well, as much in the EU we will have Bitcoin, hopefully at some point in France, as much the euro will be valuable. So it's not in opposition. It's not, by saying that Bitcoin is good, is not saying that fiat is bad. You need to understand that fiat makes you lose purchasing power over time. It's the actual mandate of central banks. It's to get you to 2% inflation. Well, this is the fact. You can say that it's very bad and so on for hours. The important is what is the solution. And in fact, the solution is good for the euro, because as much Bitcoin you have in Europe, the better it will be for the euro if the population is richer than poorer. So, since what have we announced? So we have raised, since the first day, 1 million at a 70% premium to the reference price of the share. It was at the time 20 cents. We have raised, and we have acquired 15 Bitcoin. We have raised 2.5 million with legendary investors like Adam Back, which is one of the only person that is mentioned in the Bitcoin white paper. in the world. And he's the CEO of Blockstream, which is one of the biggest, if not the biggest, Bitcoin company in the world. Also the holding company of Yves Chefati, who is also the president of Tobam, and who has launched back in 2017 the first Bitcoin open-ended fund. So we have strategic investors. We also have a dedicated board. At the board we have Ludovic Chauchin-Laurent, who is co-founder of Capital Union Bank, the largest independent bank in the Bahamas. We also have Jean-François Descaves, previously an ex-president of an asset management firm, and Jean-Philippe Casadepax, who is the CEO of the operational company. And so what is important to note is even before I joined and even before we implemented this Bitcoin Treasury strategy, we were already in a recovery and a renaissance at the blockchain group because we had done all of this restructuring and changing of the governance. And so we were already very positive on the year in terms of the stock performance. But since the launch of the Bitcoin Treasury strategy, we have outperformed Bitcoin, MicroStrategy, and Metaplanet. This is not our competition. This is our benchmark, so that's why we look at it. But this is not our competition. They are our models, they are our examples. We follow their steps, and this is for us an inspiration, not a competition. And if they succeed, we succeed as well. This is a virtuous cycle. We don't fear that other companies adopt a Bitcoin standard. As much companies adopt Bitcoin, as much Bitcoin is adopted, as much our company will be valued as well, because we capitalize on top of the same asset worldwide. And this is also why it's a massive social benefit. We would think that Bitcoin is like capitalism in its worst ways. Well, it's not. In fact, it's a solution to the problem of the Cantillon effect, where today, the richer you are, the more debt you can raise, the more assets you can have, the more value you get over time, and the value gets centralized over time, which is not bad per se, but it's the reality. And on a Bitcoin standard, when a billionaire buys 1 billion of Bitcoin in the US or in Africa or in Australia, you in France, you benefit as well, proportionally to the Bitcoin that you have bought. And this is not the case with a billionaire raising billions of dollars in debt and buying a property in Miami. The billionaire raising 1 billion of debt and buying a Bitcoin, a big property in Miami is not increasing the value of your apartment in Paris. In fact, it's even lowering the value of your apartment because rich people are choosing other cities. So by adopting Bitcoin, you actually now benefit from the adoption of everyone in the world. And then people will say, oh, but this looks like a Ponzi scheme. Well, no. A Ponzi scheme would be that there would be no absolute scarcity. With absolute scarcity, it's the offer and the demand. The value is relative and is subjective for everything. The value of water is not the same in Paris that it is in the desert, in the Sahara. It's relative. So, of course, it could be different if the supply of Bitcoin would not be the same. If people would have the ability to print Bitcoin without any cost, that would be different because people would be able to just get away with value without effort. In this case, everyone is adopting an asset that has absolute scarcity and that appreciates over time. And it's like saying that English is a Ponzi scheme because everyone could go out of the English language well. No, it's a standard protocol. It's the same for the internet, TCP/IP. It's the best standard protocol for storing value, and it's what people are adopting today. So, I have a few more slides. We'll try to be a bit faster to have at least 30 minutes of discussion. But we announced our plan to raise 300 million euros to accelerate our Bitcoin Treasury Company strategy to accumulate Bitcoin over the long term in a way that is accretive for shareholders. Why? Because we will analyze any operation we do in the prism of the objective of increasing Bitcoin per share. So any operation that wouldn't meet the objective of Bitcoin per share increase over time wouldn't be interesting for us. So we will look at any opportunity to increase our Bitcoin per share. And so I put two examples of Metaplanet and MicroStrategy. Actually, Metaplanet published just yesterday an updated plan for them in the future, and it's even better chart than this. And they show the example of what does it mean to increase Bitcoin per share. They were before at 118 Bitcoin, and they are now at 1,700 Bitcoin. Okay, that's a 1,400% increase in Bitcoin on the balance sheet. On the other side, they were at 22K shares, and they went to 50K shares. In terms of, maybe I have this wrong in terms of units, but this is the order of magnitude. And this is doubling, so it's plus 100%. So you have a dilution of 100% in fiat terms, but you have an accretion, an increase of value of 1,400% on the net value of the company. This is what is called by MicroStrategy and by Metaplanet the Bitcoin yield. So it's not a yield per se, it's a KPI, it's a key performance indicator. But that's how value is measured on a Bitcoin standard, is how much can you increase the Bitcoin per share, the Bitcoin yield, and are you able to increase more the number of Bitcoin on the balance sheet percentage-wise over time than the dilution. So here you have examples of Metaplanet that has been able to do it with raising equity, and potentially they will try to do other things in the future as well, other possibilities to raise capital. And you have the example of MicroStrategy that's been the pioneer in the space since 2020, and that has raised both equity and convertible debt. And what you can see is that it has been extremely accretive for investors. As I mentioned, MicroStrategy has done 30x in 5 years, where Bitcoin has done 15x. So people can be afraid about raising 300 million euros, but in fact, as we are planning to allocate this amount of money, if we are able to raise it, of course, it's a capacity that we were intended for. This will be the most accretive thing we can do for our shareholders, if, of course, they believe in Bitcoin. So, how convertible debt can be accretive? Convertible debt can be the fastest way to increase Bitcoin per share, because how Bitcoin per share is calculated is you take the number of Bitcoin increase, and then you take the diluted shares, meaning not only the shares outstanding that have been already issued, but also the shares that will be issued with the financial instruments that you are planning. But in fact, with convertible debt, is debt that you can pay back with shares. So if you can pay back with shares, in the future, it means that the effective conversion is in the future, and so the effective dilution is in fact in the future. So it can be the most accretive thing for investors, yet there are specific things that make convertible debt risk minimized for Bitcoin accumulation. The first one is to be more than 4 years. It can be lower as well, but if it's more than 4 years, then it's taking into account the cycles of Bitcoin that we showed, that in the history of Bitcoin, nobody lost money in Bitcoin over 4 years. So if you issue convertible debt over a maturity of more than 4 years, the risk that you take as a company is very low. Then you don't want to have a specific liquidation price. You don't want to have a margin call at a certain price as a company. What people don't understand is they think that MicroStrategy can be liquidated if Bitcoin reaches a certain price. No, Bitcoin could tomorrow go minus 80% and it will not happen anything to MicroStrategy because it's their Bitcoin. And their obligations to give back a fiat currency after 5 years in the debt that they have raised is only materializing after 5 years. And they could even raise more money to refinance their convertible debt. And in fact, even if it happens, they would have enough Bitcoin on the balance sheet to even do debt in another way with a financial institution that would do a specific service to do another type of debt to refinance. So the risk is very low if you don't have a specific liquidation price. And so that is a key point that people don't have in mind, that you don't have with convertible debt with the standard of MicroStrategy. You don't have this liquidation price, you don't have these margin calls. And this is, of course, important for us in what we are planning as a Bitcoin Treasury Company following the steps of MicroStrategy. Then you have the conversion, including the conversion at the end of the company, meaning that during those 5 years, at some point, the company will have the right to, if the stock price performs more than 30%, 40%, even more, you can put a premium that you want with the investors, then at this point, you will be able to pay back in shares. And if it's at the end of the company, then the probability in Bitcoin terms that the company will have to pay back a convertible debt in fiat is extremely low. And last but not least, convertible debt is issued typically on a market standard with a premium to the current market price. So the ordinary investor gets not only the premium to the current market price, plus the increase in market value of the company net asset value with the Bitcoin that is added to the balance sheet, plus the ability with the growth in the size of the company, the ability for the company to raise even more capital in the future. So, 3 key messages to end the presentation. The lesson I would like to, I think I have enough insisted on this, but at the end, the key message is that there is incredible power in focusing your time and energy as a publicly listed company on increasing Bitcoin per share over time. That is the key metric of shareholder value creation, and that is materialized and quantifiable if you look at Bitcoin over 5 years. I mentioned here 11%, 11x. You have Tesla at 11x. Tesla has Bitcoin on the balance sheet, but Tesla is not focused on increasing Bitcoin per share. And Tesla has even sold 75% of their Bitcoin. Even with this, because they have Bitcoin on the balance sheet, and because they are one of the most innovative companies in the world, they have only been able to just keep track with Bitcoin. So, and then you have 99% of companies in the world that are not more brilliant nor more innovative than Tesla and that will do worse than this. But Tesla, being as innovative and as brilliant as they are, they just keep track with Bitcoin. MicroStrategy, by doing their operations, continuing their operations in business intelligence, but in the treasury side, by focusing laser as focused on Bitcoin per share increase over time, they're able to do double than this and to do about 25, 30x depending on the time period. Then there is worse than not focusing on Bitcoin per share increase over time. The worst is to not even accumulating a little bit of Bitcoin. If you look at the major indices compared with Bitcoin and Bitcoin treasury companies, major indices for financial performance over the world look like complete stable coins. So in your life, as an individual, as a company, even as a government, you can choose to look like a stable coin and have the performance of a flat, not performing asset and company, or you can be powered by Bitcoin and benefit from the fact that you are keeping your money and the value of your work over time and space, and have the ability to project power over time in your operations and with your treasury. And so most companies cannot outperform Bitcoin except the ones that are capitalizing on Bitcoin, and volatility is volatility, as you know. So to finish, the blockchain group is powered by Bitcoin since 5 November 2024. And as you can see, there is massive demand in the market. I mentioned before that our competition is not MicroStrategy and MetaPlanet. They are our examples. And what you can see is, independent of what other Bitcoin treasury companies are doing, you can see that there is massive demand from investors because they are looking for ways to get exposure to Bitcoin. It doesn't mean that we are direct exposure to Bitcoin. It's just that we are capitalized on Bitcoin and we have data and AI consulting operations. But now we are powered by Bitcoin. Our balance sheet is one of the strongest, and we plan on recapitalizing more even our balance sheet with Bitcoin to accelerate our growth. And yeah, we have outperformed Bitcoin itself by 3x since November 5. And we focus on Bitcoin per share, of course, over time. That's it. Thank you so much. So quantum computing is a nice question because it comes back every cycle. You have this, what is the threat of quantum computing? The threat of quantum computing is that you will not be able to buy as much Bitcoin as you want. Why? Because in fact, if quantum computing materializes, it will affect every network in the world before it affects Bitcoin. Because Bitcoin is the most secure and decentralized network built on top of cryptography, but the most secure cryptography that you have decentralized over the world that is securing this network, because what you have is Bitcoin. You could say that this algorithm of Bitcoin could be hacked by quantum computing. First, this algorithm is used in a lot of other institutions that are a lot weaker than the Bitcoin network. And even if quantum computing was here, Bitcoin could update as well. There could be a consensus to update some rules to make sure that they are quantum resistant with what quantum could be like at some point in the next 5 to 10 years. But if quantum comes, a lot of things will be derailed before Bitcoin. And the most likely thing is that you will not be able to interact as easily as you can with your banks if quantum is here and is affecting transactions, payments over the world. And so the only asset that you will be able to store your value in such an uncertain period is probably going to be Bitcoin. And in the materialization of this risk, the probability is that Bitcoin price increases a lot because people want to buy this most secure asset in the world at this time, and they cannot anymore, and you cannot sell it for an inferior asset. And so the risk is that you will not be able to buy as much Bitcoin as you want. Then on the technical side, you can go into the details. I think we will need another course. Yeah, there are already discussions. Developers are thinking about it. There is a risk in terms of the addresses, early stage addresses of Bitcoin in the first years of Bitcoin. But in any case, even if it happens, imagine that someone breaks breaks a Bitcoin algorithm with quantum. Then in this case, potentially, the first people that would be adopting quantum technology would be Bitcoin miners to secure more the Bitcoin network. And there could be, the worst case would be someone would be able to appropriate himself from the Bitcoin of past address. This would affect dramatically the price of Bitcoin. But Bitcoin itself would likely not be affected per se. and Bitcoin could be updated at this point, but this is like 5-10 years away in terms of the estimations of the best cryptographers in the world. So it could happen, but a lot of things will fail before Bitcoin, and it might be the last one to fail. It's like the common, what happens if an asteroid goes on Earth? What happens with Bitcoin without internet and so on? Well, if an asteroid comes on Earth, I'm sorry, but we might be gone. So, and even in this case, you have satellites going over the world with Blockstream that I mentioned. They have a satellite to transmit network, internet, even if there is an issue on Earth on this point. So, I mean, and the network is just going to get stronger and stronger. The value, the use case is the store of value. Money can be understood as digital capital and digital currency, the medium of exchange. We have been used to understand the euro as money, but the euro is today more of a medium of exchange than a store of value. I mean, if you are storing value in euros, good luck. It's not bad. I mean, it's the purpose of the euro to be engineered to be the best potential medium of exchange in Europe. But go out of Europe and try to sell your euros, it will be extremely hard. Well, you can go out of Europe and sell your Bitcoin. And it will be hard as well because a lot of people still don't understand, don't accept it. So that's why we mentioned the payment use case. This will take time to develop around it. But the core value of Bitcoin is the store of value. And then when you have the best store of value, digital capital, then around it, you have a lot of applications that emerge. I didn't speak about it because it was not the topic of the conversation, but you have all the tokenization of financial assets that is also emerging on top of Bitcoin in other blockchains as well. But over time, it will converge with Bitcoin because it's the best store of value, it's the best collateral asset in finance. So it will be the cornerstone of digital capital markets as the best store of value. And then you have layers on top of it, applications that will enable more functionalities for medium of exchange, for payments, either retail or wholesale, exchange of Bitcoin versus tokenized securities, and so on. So the core value, and Bitcoin is optimized for the store of value. Other crypto assets, they are optimized, they are blockchains for functionalities. The issue with this is that first, they are not bound by energy, they are using other protocols. But second, since they are focused on the functionality, like in the world, the nature of things is that prices go and fall to the price of production. So normally the world should be deflationary. It's just not deflationary because technology is deflationary. Okay, every time it costs less to produce things with technology advancements. So the world should be deflationary. What this means is that your money should appreciate over time. This is with Bitcoin. In the Bitcoin world, I already see that. In fiat terms, you don't see that because you have monetary inflation that outpaces the productivity gains that you can see. And so what you have is money that loses value over time because the money we have, we know, is only a medium of exchange and not a proper store of value. So the core value of Bitcoin is the store of value. And based on this foundation of store of value, you can create a lot of applications that are on stronger foundations. You take a risk. You take a risk. The risk you take is that for some reason, Bitcoin is not anymore decentralized and secure. Why I say that? It's from someone called Jeff Booth. I recommend you to listen to him. He's a very interesting thinker, and he's a VC. By the way, it's an interesting perspective. If you want to launch a company, now companies that raise money are able to raise more money for their project if they say that they will put 10% in Bitcoin. Why? Because if the VC, traditionally the VC says, I put money in 10 companies, 9 will fail, 1 will give me 100x. Okay. The good VC say 5 of them will give me 100x. But the fact of the matter is, in a Bitcoin standard, if you put 10% of the money raised, in 10 years you have still 1 company or 5 companies that have performed, but the other 5, they kept the Bitcoin and they give back the money. At least, because if you have this 10x that I mentioned today, and you could have it later on, then you put 10% of the money raised in Bitcoin at 100K today. In 10 years, it might be at 1 million. You did 10x. You give back the money to the shareholders if you failed. So it's de-risking financial markets. It can also provide more risk if people don't understand Bitcoin and they start to over-leverage on top of it. Well, Bitcoin does its thing of hyper volatility. So we will continue to see episodes of high volatility. But we have also seen that for governments. It works for governments too. You have seen El Salvador adding Bitcoin to their balance sheet, even having an approval for a loan from the IMF, and days after buying more Bitcoin, not directly related, but still. And what they have achieved is enhance their notation from the agencies, the S&Ps and so on, to have a better notation of creditworthiness. It's like MicroStrategy having 100 billion market cap with about half in Bitcoin. I mean, the value of the company is not only based on the potential cash flows of the company. Today, you have, or yesterday, or the day before, you have NVIDIA losing 500 billion of market cap just because some company launched a free open AI model. How strong is this company? If this company was capitalized on Bitcoin and not only valued on potential future cash flows, it would be stronger. And so if you have Bitcoin on the balance sheet and you see other companies that don't have Bitcoin on the balance sheet and you want to value those companies, the company that has Bitcoin on the balance sheet is much more valuable because it's instant liquidity, it's globally accessible capital. You can do anything you want with it at any time with the highest liquidity in the world. And it's not only based on future cash flows. If a company today does a bad quarter, they lose almost all their value because people can say, oh, imagine if the future quarters are bad and so on, it's the complete failure of the company. Whereas if you have Bitcoin on the balance sheet with your past operations, you can still pivot to another operational activity if the other one didn't work. So for government, to go back to the question, it worked for El Salvador, and it will necessarily work for a bigger country. The only condition is to be focused on Bitcoin. If you add Bitcoin and other crypto assets and so on, first you lose focus and you are not buying as much Bitcoin as possible, you are completely distracted, and you misunderstand the difference between Bitcoin, the best store of value, and blockchain technology, which has good business applications, specifically for tokenization of financial assets. And even this is converging over time with Bitcoin. With Liquid, for example, if you like to see tokenization of financial assets, I encourage you to look at Liquid, which is the tokenization technology used for tokenization of financial assets. For example, they tokenized MicroStrategy shares in Luxembourg so that they can be traded with Bitcoin directly, 24/7, 365, on the open market with your wallet directly. So this is the future of finance. In the future of finance, your AI company you will be able to raise capital with a tokenized security, probably in the US first. In Europe, it will wait maybe 10 years, but anyway. In the US, that's what they want to do. They want to facilitate the ability to raise capital for young company and then to capitalize on Bitcoin to make sure that you have a long-term growth. As long as you are continuing to have adoption of the asset and understanding of the asset. People don't want to sell it and they just buy it, and then you have 70% of the population, like internet, that has a smartphone and so on. But I think that even with 70% of people with a smartphone, you have a vibrant economy and it accelerates much more things. So in this context, as a store of value, by the way, we are very far from this. We are at 5% adoption, and mainstream adoption starts to kick in when you cross the 13.5% to 20% in the theory of adoption of new technologies and innovation. When you cross these percentages, you go mainstream, you just cross the ribbon, because then the adoption goes much faster. So this has been seen for financial institutions. That's why you see a lot of activity right now in finance, because in finance, for investors, you're already at 15% of people, 20% of people that are already invested in Bitcoin. Even in the US, it's already about 20% of the population that have invested in Bitcoin and other crypto assets. In France, it's like 10%. So we're extremely early. But when we get to 70%, this might be like 20 years away. So there is plenty of time, I think, for big financial returns. But even when we get there, we might not be at the 60% annualized return that I showed. We might be at the 15%, like the S&P, because it's very probable that the growth of Bitcoin as a market cap, if all companies are capitalized on Bitcoin, then the growth of Bitcoin bought will be a relation with the value that is being created in the world and the growth of the companies. As much as they grow, as much Bitcoin they can acquire and so on. So it would not be bad. It would just be that Bitcoin at this point would be the global standard for store of value. It is already the global standard for the best store of value potential, but at this point it would be recognized. And then you would have maybe other opportunities around it. You would have opportunity of growth from Bitcoin companies or Bitcoin capitalized companies that would launch new services, and it would not be bad. So yeah. Well, first, I don't believe that everybody will hold. If you are on a Bitcoin, the key point is if you don't spend Bitcoin, you don't have enough Bitcoin. Because you are under-allocated and you are not spending Bitcoin because you have too much fiat. So in a world where everyone has Bitcoin as the core store value asset and even money, in this world, if you want to invest in a new Polytechnique or to build a center for research in Paris-Saclay, you will have to sell Bitcoin to buy the land and to build something. So there will be pressure on both sides, and people will, but potentially in this case, you will sell Bitcoin, you will not sell the Bitcoin for fiat, you will just transfer Bitcoin. And in this case, you don't even have an exchange rate. I mean, in the world that you are describing, you don't even have a percent compared with euro. You don't have euro, you have Bitcoin in the world you're describing. In a world where you still have euro, the euro would be potentially completely backed by Bitcoin, so it would just be a representation of a medium of exchange on top of Bitcoin. So you are coming to the point that 1 Bitcoin equals 1 Bitcoin, and the percentage return that you see is just because we are in a fiat mind. I left the fiat mind, but we are in a fiat world still. So we interact with financial performance in fiat terms because things are still priced in fiat, but in time, things will be priced in Bitcoin. We already do it. I mean, if we look at potential growth opportunities for us, we will evaluate how much Bitcoin can we add to the balance sheet with this. And the euro, the dollar price doesn't matter. Doesn't matter. So in fact, in 20 years, when you have 70% of the population using Bitcoin daily as a store of value and medium of exchange, not directly but through applications, then what matters is how much value can you generate in the world to get more Bitcoin and be paid in Bitcoin. And that's what we are already doing. Our objective is, now that we are on the Bitcoin standard, is how much value can I generate in the world? And now you can focus on the value that you can generate in the world instead of trying to be a professional trader. And that's why I personally work for Bitcoin, and that's why I work to develop a Bitcoin Treasury Company, is because then we can focus on creating value for the world, and we don't have to try to be professional traders. So, as an investor, between investing in VC companies without Bitcoin and Bitcoin, I would prefer Bitcoin. Okay. But everyone, because it's risk adjusted. Okay. I mean, that's what people don't understand. You have a crypto asset, people will say, oh, I made 10x on some crypto coin, meme coin, and so on. Okay, but how much did you invest? Oh, no, it's just 1,000 euros and so on. Okay. And then someone else did 5x with Bitcoin, and they put 10,000. You see? Yeah. So, I mean, there is two things that are important: is the amount you invest and the percentage of return, not only the percentage of return. And then there is the risk of execution. If you invest in companies that are not at all invested in Bitcoin, to be a good investment, they need to generate 60% growth every year. Good luck. I mean, you can generate 60% 1 year, 2 years, 3 years. Will you be able to do it over 10 years? And the money you made, if you don't put it in Bitcoin, what it will be worth? I mean, it just completely losing value. So, as a VC, then it makes a difference between investing in Bitcoin versus investing in a Bitcoin startup, is that you get the Bitcoin returns plus the VC returns. That's crazy. I mean, you invest in 10 companies with 10% each in Bitcoin. Basically, what you can get indirectly is to get back your money in Bitcoin. Okay? And then you get the VC return. And for Bitcoin VCs, if these companies are exposed to the Bitcoin industry, they build their services in Bitcoin. So you get the cushion of security with Bitcoin, the VC-like returns, and the Bitcoin ecosystem type returns of a Bitcoin company. So it's just completely different. And of course, if you are an AI company, I mean, if an AI is going to adopt a digital asset, a digital currency for payment, it will be the best store of value. So I think that even being focused on AI, you cannot avoid Bitcoin even as an application layer for transaction. If AI do the work, they will want to be remunerated in the AI bots will want to be remunerated in Bitcoin. So an AI company that is not allocating its cash flows to Bitcoin is just going to get bought in 5 years by an AI company that invested in Bitcoin. Imagine you launch your company, you raise 100 million euros, you put 10 million in Bitcoin, you grow to 100 million valuation with the 90 million you raised. Valuation at some point, not at the end. And you have the 100 million of Bitcoin, the 10 million that became 100 million. And then by the time that you do your exit, that you become public, then potentially you can just buy your competition. Because you have so much capital that you can just do M&A with your competitors. So for the VC, if the VC doubts between 3 AI companies, the VC invests in one of them, and this one will allocate their capital to Bitcoin, and over time they will be able to just buy their competitors by issuing shares, and acquiring their activity because their cash flows will be worth nothing over time.